In this video, we will see if the uptrend in Xcn coin has started. Please watch to the end so you don't miss anything. First of all, there is a clear downtrend in the current market structure, and the price needs to break above this trend line. While this long-standing downtrend continues to have an impact on price action, the fact that it is still unbroken at the moment suggests that the current downward pressure continues. If the price manages to break this downtrend, it may be possible for the market to change direction and start a stronger upward movement. However, it should be noted that if this breakout fails to materialize, the price may resume its downward trend and a downward movement may start again from the current levels. When the price breaks the downtrend, it needs to retest. After the retest, it starts an uptrend, but you should not make a decision right away. You need to look at other metrics. Keep watching. There is a strong bullish order block just below the price, and this level stands out as a zone of intense buyer interest. Looking at past price action, this area has worked as an important support area before, and the price has reacted strongly and moved upwards from here. If the price falls to this level again, buyers have the potential to step in and push the price up. This suggests that this area is a critical support in the current market structure. One of the most important characteristics of order blocks is that they are areas designated by large institutional investors or liquidity providers. Since these areas are usually characterized by high volumes of buy orders, the price is likely to face a strong reaction when it arrives here. The price may turn back and try to get support from the order block and go up again. And there is a prominent bearish order block at the top of the price. And this area stands out as a critical resistance point, where sellers come into play strongly. Previously, it has been observed that when the price reached this area, it faced strong selling pressure and downward movements started. This suggests that the top order block is actively working and the big sellers in the market are concentrated at these levels. The price needs to break the downtrend to get to this zone. And the price may not be able to break the bearish order block at once. It needs to try several times. According to the Elliott wave theory, the price is currently moving in the third wave, which is usually known as the strongest and longest wave. The third wave is usually the phase where traders pay the most attention and the price rises the fastest. Currently, the price seems to have reached the 1,618 Fibonacci extension level, which is usually considered as the minimum target level of the third wave. If the price does not encounter any strong resistance at this level and manages to maintain its bullish momentum and break through it, it has the potential to move towards the green line level, which has been identified as the next target. And there are several targets. As the price breaks through the targets, it goes to the next target. The chart is currently showing the formation of an inverse shoulder head and shoulders pattern, and price action is currently in the process of forming one of the most critical parts of the pattern, the head. This pattern is generally considered as a strong reversal pattern, indicating the end of a downtrend and the start of a new uptrend. If the completion of the pattern occurs, there is a high probability that the price will make a strong move to the upside. The head and shoulders reversal pattern consists of three main components: the left shoulder, the head, and the right shoulder. At the moment, the price action is forming the head, and this area is known as the deepest point of the pattern. Once the formation of the head is complete, the price may rebound upwards to form the right shoulder. At this stage, an important indicator is how the trading volume changes as the price approaches the shoulder levels. If the formation of the right shoulder is accompanied by a strong increase in volume, the validity of the pattern is more strongly confirmed, and the target is placed above the upper line, taking the depth of the head, and the target is revealed. Another noteworthy structure on the chart is the ascending channel, and the price action is seen to move according to certain levels within this channel. Ascending channels are generally considered an important technical structure that shows that the market is in an upward trend and the price is moving between certain support and resistance levels. As of now, the price has touched the middle band of the channel and is trying to hold on by testing this level. In an ascending channel pattern, the price usually moves upwards with support from the lower band and rises towards the upper band. The middle band is a dynamic zone that can work as both support and resistance in this process. At the moment, it seems that the price has reached the middle band and is pushing here. If the price encounters a strong buyer's reaction here and an upside breakout occurs, there is a high probability that the movement towards the upper band of the channel will continue. In this case, it is conceivable that the price could gain new momentum and continue its trend. However, if the middle band level cannot be crossed and the price encounters resistance at this point, there may be some retracement. In such a scenario, the price may make a correction towards the lower band of the channel where buyers are expected to step in again. The real price breakout happens when the price breaks the upper band of this channel. Then comes the king of the uptrend. In the Bollinger Bands, it is observed that the price is currently above the upper band. This can often be taken as a sign that the market has entered overbought territory and that the current uptrend may lose some momentum. Bollinger Bands are a volatility indicator that shows the price fluctuating between certain levels, and a breakout of the bands suggests that the price is overextended in the short term and a possible correction could be coming. Although a breakout to the upper band indicates that the market is in a strong buying wave and the momentum is bullish, it is considered healthy to have intermediate corrections in order to establish a sustainable trend in the long term. For the time being, it would be positive for the trend to continue if the price retraces slightly from the upper band level and makes a correction toward the Bollinger middle band. The middle band is an important level that usually represents the average level of the price and works as a dynamic support area. The price cannot always rise steeply like this. It has to fluctuate. A recent bottom-up crossover on the MACD indicator can be considered an important turn signal in the market. The MACD is an indicator that is often used to measure the strength and direction of the trend, and such crossovers are considered strong buy signals. In particular, when the MACD line crosses the signal line from bottom to top, it indicates that the price may have a strong bullish potential. This usually means that an uptrend has started or is strengthening. Also, the MACD breaking above the 0 point is another important signal that a positive momentum is building in the market, and buyers are dominating the market. The 0 line is a reference level of the MACD that gives information about the trend direction. If the MACD moves above 0, this indicates that the general mood and momentum in the market is positive, meaning that the uptrend is gaining strength. And if the MACD continues to move upwards, the price will continue to rise at the same pace. The presence of a downtrend on the RSI indicator means that the price is heading towards the oversold zone, and there is weakness in the market in general. However, when the RSI breaks this downtrend, it is an important sign that there is a shift of strength in the market, and a possible bullish move has begun. The RSI breaking this downtrend signals that the price is experiencing a positive directional shift after its previous weak moves, and the momentum is starting to shift upwards. However, the RSI breaking the downtrend alone may not be a sufficient signal. After a breakout, a retest is usually done. That is, the price or the RSI goes back to the broken level and tests it to see if buyers will step in. If the RSI starts to rise again after the retest, the price will rise with the RSI. On the vortex indicator, the blue line crossing the red line from above is a strong signal that the market is in an uptrend and buyers are dominating the market. When the blue line crosses the red line from above, it indicates that buyers are dominant and prices are trending upwards. In this case, it can be said that bullishness prevails and prices have the potential to continue rising. If the blue line stays on top, this indicates that the market is in a strong buying trend and prices may continue to move upwards in line with this trend. Or if the blue line crosses further upwards, the uptrend will accelerate. When we look at the 200 EMA, the price has touched the 200 EMA. And if it goes above it and retests, the long-term uptrend will start. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.